Welcome, everyone. I'm Mike Mershazadeh.
And I'm Ashley Ward.
And you're listening to the What Matters podcast, and our mission
to spotlight top RIAs, wealth managers, and investment professionals who are redefining wealth management.
Join us as we dive into their journeys, strategies, and insights.
Whether you're an investor or an inspiring pro, this is for you.
Get ready for impactful conversations on the What Matters podcast. Hey, everyone. Welcome to another exciting episode of the What Matters podcast, where we delve into conversations with remarkable individuals making a difference in the field of wealth management and beyond. I'm Mike Mershazadeh.
And I'm Ashley Ward.
So today we have a special guest joining us from Level 4 Advisory Services. He's a CEO and co-founder, a prominent figure in the world of wealth management, and a serial entrepreneur. Please welcome Jake Tomes.
Well, thank you so much for joining us. Let's dive right in. So, Jake, let's start by diving into your journey as an entrepreneur in the financial services industry. Can you share with us and our listeners your origin story? Tell us a little bit about your background there and the story behind leading and co-founding Level 4 Advisory.
Yeah, so it's really an exciting time for our firm. We're about to enter our 25th year in business, and I don't feel like I'm that old, but it's been a long journey. I had the opportunity before starting Level 4 in working in Dallas-Fort Worth, which was really the hotbed and location where CPAs getting into wealth management really incubated. And there were two leading firms here in Dallas-Fort Worth that really pioneered disruption in our space, and that was firms called HDVest and its spinoff firm by the name of First Global Capital Corp. And I had the opportunity of becoming employee number 23 at First Global, and this was in the late 90s, right when states like California and Arizona, where you all reside, first changed their bylaws. So it was not a conflict of interest for a CPA to be able to get securities license and offer wealth management to their clients. Texas was the first state in 1984 to change their bylaws, and Herb Vest actually lobbied in Austin to make that happen. And his firm, HD Vest, then recruited CPAs in Texas to join his firm, and it kind of grew from there. Herb's president, a guy by the name of Stephen A. Batman, great name. He left HD Vest to start First Global, and like I said, I was employee 23 there. And when I was there at First Global, I was getting calls from these great CPA firms from really New York to Los Angeles. And all the stories kind of sounded the same from these calls. It was partners in great CPA firms. They would have, 2 to 10 partners in their CPA firm. And the call consistently was, Jake, I'm in this great firm in Los Angeles. We've got 8 partners. We have wonderful clients. We're really excited about offering these other services to our clients. And we just passed our Series 7, our 66, and our insurance licenses, but we don't know what to do. We're believers that we should be offering wealth to our clients. But we're technically very competent in how financial advice should work, but we don't understand how to market our services. We're not marketers by trade. We don't understand how these products work, and we need some help. So I was on the front lines, being able to have those conversations and realize pretty quickly that what the firms needed and what I could provide over a back office type solution had a huge gap. The firms needed somebody that could sit in their office, consult with them, build a business plan and a marketing plan. And that was the basis behind my belief in wanting to start Level 4. And it was really in May of 2000 when we launched, really as a consulting firm first, to help these CPA firms drive wealth inside their accounting and tax practice and make it viable. And as our brand means today, kind of take that business to the next level. So that was May of 2000 now. And when we started really recruiting firms that really wanted to make wealth viable and meaningful, and was on the road a lot to try to identify those firms that really got it, really wanted to have a pro-growth business and marketing plan, and felt like taking that practice, that wealth management practice, to the next level was a passion that they all shared. So that's how we started.
Hey, everyone. Welcome to another exciting episode of the What Matters podcast, where we delve into conversations with remarkable individuals making a difference in the field of wealth management and beyond. I'm Mike Mershazadeh.
And I'm Ashley Ward.
Today, we have a very special guest joining us from Level 4 Advisory Services. He's a CEO and co-founder, a prominent figure in the world of wealth management, and a serial entrepreneur. Please welcome James, or I apologize, Ashley, let's take that back. I'm going to redo that.
Go for it. And mark the clip.
And do I pronounce it Tomes?
Toms. That E has been the basis of my demise. So it's like T-O-M-S. Toms. Yeah.
Okay. I'll start where I left off there.
It's a little easier than your last name though, Mike.
Right.
just a little bit easier.
Mine's the alphabet. So actually I'll pick up okay. So today we have a special guest joining us from Level 4 at Advisory Services. He's the CEO and co-founder, a prominent figure in the world of wealth management, and a serial entrepreneur. Please welcome Jake Tomes. I'm sorry, one more time. Yeah, I've never done a podcast out of an Airbnb with limited reception there. So I'm battling the 3 dogs and bit of a family here behind me, so I apologize, guys.
Oh,
so,
Mike, we can roll with it. It's not that important. So,
okay, one more time here. Today we have a special guest. Is it time to go?
Go for it.
Today we have a special guest joining us from Level 4 Advisory Services. He's a CEO and co-founder, a prominent figure in the world of wealth management, and a serial entrepreneur. Please welcome Jake Tomes.
Jake, it's a pleasure to have you on the show today.
Thank you, Ashley. It's a pleasure to be here. Thanks to you and Mike.
Thank you. And so that was 25 years ago. About to be 25 years ago.
Yeah, be 25 years ago next March, and we'll be celebrating our 25th year in business. A lot has happened since then. Originally, for the first decade, we recruited about 30 independent CPA firms. Originally, we were a consulting firm to help drive, coach, and provide practice management and best practices on how to build wealth inside of an accounting firm. And real quickly formed an OSJ for broker-dealer business and gave us a platform to recruit to. Then formed an RIA and an insurance agency pretty quickly into our formation to build us a corporate structure to execute and to implement strategies through. Went through several transitions of different broker dealers as we were finding partners and growing. Was at one of the largest independent firms in 2012. Really recruited a lot of firms the first few years at this big national brand where we were clearing and custody and using broker dealer services, as well as offering RIA services and insurance services to our advisors and to their clients. And then in 2014, I was approached by the managing partner of a top 25 CPA firm, Carr, Riggs & Ingram. And in 2014, they were the fastest growing CPA firm in the country out of the top 100. And our firm had some success and some recognition of working within CPA firms to build wealth. And the managing partner of this firm reached out and given the fact that Carr, Riggs & Ingram was a fast growing CPA firm, but had not incorporated wealth management into their practice yet, reached out to see if Level 4 would be interested in merging in to the Carr, Riggs & Ingram family and providing some leadership opportunities for myself and others to really continue to run Level 4, but have it be a part of the Carr, Riggs and Ingram family. So in 2014, we merged Level 4 into CRI, into Carr, Riggs and Ingram, where still today I'm an equity partner in CRI and still maintain my role as CEO of the Level 4 group of companies.
So
We continue. Yeah, go ahead, Mike.
I was going to. So you guys merged with CRI. They were, as you said, an accounting firm. Is that correct? CRI.
Yeah, top 25 CPA firm. Mm-hmm.
Really
That's
cool.
right.
And so are the two firms still together, or you guys operate sole and separate?
Yeah. So my K1 is Carr, Riggs and Ingram. I'm an equity partner in Carr, Riggs and Ingram. We're a top 20 CPA firm in the country. We have since continued to grow our RIA. We have since in 2020 acquired a broker dealer. So we have a broker dealer, Level 4 Financial, in addition to Level 4 Advisory Services, our SEC registered investment advisor. We've also launched Level 4 Capital, which is an SEC registered RIA as well, but it's an institutional asset management division where we have a team of CFAs and proprietary separately managed account products for our advisors and for our clients. We also have Level 4 Insurance Services and Level 4 Insurance Agency. So we have a very robust insurance marketing organization for life insurance, annuities, long-term care, disability business. We have a company called the Medicare Store. And so we offer those products for seniors having healthcare decisions into 65 and older. We have Level 4 Business Services. So all of our traditional CFP, financial planning services, have a slant and focus towards small business and medium-sized business owners. And then we have a sports entertainment division for athletes and entertainers. And so that's the org that I lead within Level 4. We have around 250 registered people in our firm. We have around 130, 40 independent advisors that are 1099 from New York out to Hawaii that use our firm either as their broker dealer or their broker dealer RIA or their insurance agency. Then we have about 1,000 agents, insurance agents contracted with one of our carriers through our insurance offering. So they may have an insurance contract through a Level 4 insurance entity. So our platform is fairly broad and comprehensive. And then if you look at the Carr, Riggs and Ingram relationship, we're a top 20 CPA firm with over 2,000 employees in the accounting firm. We're really the largest CPA firm out of the Southeast and Southwest U.S. that's based out of the Southeast. And we have offices from Miami to Raleigh, across Kentucky, throughout Texas and into New Mexico. And there we are, sizable and are represented in pretty much every major market and a lot of smaller markets as well. Within the CRI family, we have an investment bank. We have a payroll company. We have our own trust company. We have a TPA group. We have a data analytics group. So you look at all of what Level 4 has and the ability to create a scope and an engagement with the client. And then you add all of the traditional CRI services. It does really allow for a very dynamic, a very comprehensive, and a firm that has a lot of ability to scale out, going forward as we continue to grow and expand our reach throughout the country.
Wow. So let me ask you this. When you guys are, from what public information gives us, around 4.5-5 billion now of AUM.
In the RIA, we do. In total, I would suspect by October, we have a couple of transactions that are looming. By October, we'll be about 17.5 billion in total assets under control. and about 7.5, 8 billion of that will be in the RAA entities. The rest will be in the insurance agencies and in the broker dealer. So we're starting to kind of ramp up our M&A activity. We have a tremendously growing business dev and recruiting team. Our model is really to help advisors, again, take their business to the next level and grow and expand it. And our branding has really, evolved over time to where most in our profession, in my opinion, work as either a sole proprietor advisor or a small advisory group or team. We consider those sole proprietors as kind of level one advisors, and eventually they may hit a glass ceiling or a cap, and they can't grow because it's tough to grow and expand if you're a sole proprietor. All the way to level 4 team, which is a high performing ensemble practice of subject matter experts and specialists. And so we designed our firm to help advisors that really want to grow and expand take their business from a level 1 kind of sole proprietor generalist to a high performing team of subject matter specialists. And that helps us create a pretty comprehensive engagement with a client. I keep saying engagement and scope because I think that's important in our profession to do a better job of documenting our engagements with our clients and what we say we're going to deliver and delivering based off an engagement letter. We want to be able to do that with a high performing team of subject matter experts versus a generalist that can't go extremely deep or technical in the various aspects of wealth. And we've designed that engagement potential based off the 7 core disciplines of the CFP process. So you talk to a lot of CFPs, and they will probably state that the CFP process defines a comprehensive engagement in 7 core disciplines. They have the discipline of financial planning, organizing and analyzing wealth as a second discipline, investments as a discipline, insurance as a discipline, and we all know that can be various layers and specialties in insurance, retirement as a discipline, and then there's 2 that we think we're uniquely positioned, and that's estate planning and tax planning. And so we try to create engagement that can cover all of those disciplines and go very deep and technical and tax oriented when we create an engagement and an offer to provide our services to our client base.
Gotcha. So let me ask you this regarding when you said you had 250 individuals that were registered, and what was it, around 140 1099 advisors? Are the other 110 are they like W-2 employees of the company?
Yeah, they're W-2 of level 4. Their W-2 says Carr, Riggs, and Ingram on it. It gives them the opportunity to work inside or adjacent to a Carr, Riggs, and Ingram office, CRI, tax office location. And we can go to market as one firm, even though we may have a separate brand, but we can serve our small business and medium-sized business owner clients as one firm where they're doing tax engagements or consulting engagements or investment banking engagements. We can walk alongside them and offer our business solutions or a corporate retirement plan or corporate or business insurance or corporate business estate, those types of ancillary services, in addition to the traditional services that most wealth management firms offer, which is asset management and financial planning.
Gotcha. And so in total, how many total teammates are there at level 4 under the RIA structure there?
We have about 250 producing advisors, and then I've got a staff here in Dallas of about 80 or so. And
Wow.
That includes legal, compliance, operations, marketing. Those are your traditional back office services. And then we have middle office and front office services as well. We've defined our value prop in through the not just the products that we offer, but we've defined those by practice units. So we have a head of asset management, we have a head of insurance, a head of corporate retirement, a head of financial planning. So those 7 verticals, I've got director heads that lead that product vertical, and then try to have a specialist located in those W-2 offices that have a dotted line management, so that when we're in Atlanta, we have that best of class deployment of that vertical coordinated in Atlanta, just like it would be in Palm Beach, just like it would be in Houston or Austin or Raleigh. And so there's connectivity amongst our W-2 advisors, where if we get an idea from an advisor in Raleigh, we can share that with an advisor in Santa Fe.
Mm-hmm.
And that becomes institutional and cultural within our firm, and it elevates the level of advice and specialization that subject matter expert can deploy. And the way that we have it structured, it's then shared within our network for, improvement, so that we can all get better at our craft and get more technical and get more tax oriented in how we deliver those services.
And thank you for sharing. And so, with where you guys are at right now, you've built around over 300 employees just in the RIA side. And God, that's remarkable. And is there any other does everybody work under level 4? Or are there other DBAs that they go under as well underneath your umbrella?
Yeah, within my org, everyone has a level 4 card, business card. They may have a couple of brands that they promote because they're duly registered with a broker dealer, or they do business with level 4 insurance and are in our life insurance division or our Medicare store division. But everyone's, employed, as far as our W-2 employees, under the same entity. Our 1099 advisors, they may use our brand because they want to leverage our scale and our marketing, or they may have a DBA where they're Ashley Ward Financial, so that they could use their own brand. And we have a lot of our independents that have their own DBA and use us as a back office and a middle office to help them grow their business. And then if they have a client that, let's say they're a small business owner and they're looking to sell their business, and they want to use our business services and planning division or department, or use our investment bank, then we can be front office and support the delivery of that strategy or that recommendation of that client. And it's all kind of in the family, in the network of our firm.
And so let me ask you this, in regarding to the growth of the organization, have you guys done that more organically or inorganically?
A lot of both. We've still only scratched the surface of the business that we can do within Carr, Riggs and Ingram. There's hundreds of thousands of clients, and we're just, scratching the surface there. But we've also done, transactions, and we'll continue to do growth through M&A. So we bought a broker dealer in 2020. We bought a second broker dealer RIA in 2022. I anticipate closing another one here in the next 60 days or so. And we do have a pretty broad pipeline, because I think especially the RIA space, a lot of advisors formed an RIA to move out of broker-dealer compliance, to make life simpler, to be more entrepreneurial and be in control of their destiny, and to create value. And that's it's a great reason to form an RIA. But that business, I think, is probably at the beginning stages for maybe more consolidation, because a lot of these firms are 100 million, maybe up to $1 billion.
Right.
And they realize that what I love doing is I love working with clients. Running a business, and the SEC has almost become more complicated than even FINRA was when I was a broker dealer rep. And they're starting to go through these new SEC examinations, and it's gotten real. Cybersecurity's gotten real. Compliance policies and procedures have gotten real. Reg BI has gotten real. And these firms are having to to invest so much to stay relevant, and then growth on top of that is hard when you're a smaller RIA. So I think there's huge opportunity for consolidation. We want to be on the buy side of that. And we think we've built the backbone and the infrastructure to really bring a strong value proposition for, independent RIAs that want to be a part of something that might be a little disruptive for the future of financial advice.
Thank you.
And so, Jake, looking ahead, what do you see as the future of the industry, the future of financial planning and wealth management? Any strategies, trends, technologies that you really think are going to be leading the way in innovation in these coming years?
Yeah, I mean, we could talk everything from AI to bots and how that's going to change and disrupt. But I do think, there's a huge untapped desire to deliver financial advice for a pretty interesting sect of potential customers. And I think there's this huge opportunity for small and medium-sized businesses to get financial advice from firms like ours. Traditionally, small businesses and medium-sized businesses have not been on the radar of most financial advisors because they don't have a lot of money or cash to invest. Their money goes back into their business, and it probably should be. It should go back into their business. But business owners are very willing to pay for advice, and that advice is actually deductible to them, where AUM fees are no longer deductible anymore. They used to be, but they're not anymore. And so a small business owner, if they're getting great quality financial advice, is very willing to pay $50,000 a year in advice. They don't have a $5 million portfolio to manage. But from a revenue perspective, for most advisors charging 1%, that's the same fee. But
Right.
nobody is attracted, or no one's attracting those types of prospective clients. And a lot of these businesses, we're in Florida, North Carolina, Georgia, Texas. We're in great markets, and our business owners are thriving, especially small business owners. A lot of them are. And so we think there's huge opportunity for the next decade to be positioned to give advice to these businesses. And a lot of them are looking at private equity or doing transactions. And at the end of it, they're receiving 10, 50, 100, $250 million. And then there's, opportunity for a traditional advisor to do what they do, which is mainly managing money. So I think, to directly answer your question, I think the future is being able to give advice and be paid for the technical and tax oriented advice that you give versus just being an asset gatherer or just building a financial plan. Because honestly, it's pretty commoditized. And I think most RIAs would say that is kind of a commodity, whether you're managing a portfolio with this firm or that firm or using these ETFs or active or passive funds or private equity or credit. It's hard to differentiate yourself by being an asset manager, and most are asset gatherers. And then the financial planning process, I think a lot of firms do it, but that's most firms have revenue drivers based off assets under management. And so I think advice should be independent from managing money or portfolios. And I'm a big believer that those that get that will be disruptive and will be able to differentiate at least a bit of their services.
Yeah, that's a great point there. Shifting gears a bit, Jake, what investment or sectors are you most excited about right now? Let's talk a little bit about that.
Yeah, so we launched our first ETF, talking about asset management. We launched that within Level 4 Capital last year. Got to ring the bell on the NASDAQ, which was really a bucket list kind of opportunity. We launched that with ALPS, our partners with ALPS. And so our ETF is under the symbol LGRO, large cap growth. And we're excited about launching more investment product. We've got some long, tenured GIPS verified track records now. And so we're very excited about that. So our asset management business will be institutionalized. We can go after pension funds and institutional clients, not just our retail advisors or their clients. So we're excited about separating that. Our business services engagements, as I mentioned, we're getting so much traction with small to medium-sized business owners. So we're very excited about that launch. This group of clients that are probably, I'll say, $5 to $50 million net worth families. They're too big for most advisors at independent firms, or they're too big for even a lot of advisors at Merrill or Morgan Stanley. They need kind of a family office type environment, but they're too small for their own single family office. So we think there's huge opportunity for these, we'll call them ultra high net worth families or businesses, to get a scope that includes tax and insurance and investment and planning and, TPA and consulting and all of this in one engagement. We see huge opportunity there. And then the fourth thing, I like fours, level 4. I'll say four things I'm excited about. The fourth thing is our international business. So we're anticipating a launch in the fall, being able to have an international wealth division within our group. And that will help with our clients that are non-U.S. Being in the Southeast and Florida and in Texas, we have a lot of non-U.S. clients that are doing business in the United States. And a lot of firms are exiting that business, but a lot of very successful businesses and families are maybe not U.S. And we're excited about the launch of that division within our firm.
And so when do you guys think that division is going to be launched?
We hope by October 1st.
Very exciting.
And so let me ask you this: with all the disruptions that's been going on with our economy, there's been since COVID, there's been a huge fluctuation with interest rates. Where do you see, after the election, or maybe even starting before, what do you see the future of the economy looking like there?
I would fail to say I have any bit of economist in my experience. I just know by what I see our clients. And again, a lot of our clients are in the Southeast and Southwest United States. And I know in Dallas, where I am, the economy is still thriving here. There's bubbles and pockets that are challenged. The Florida economy is thriving. Our small business owners, for the most part, are doing well. North Carolina's booming. Atlanta's booming. So I think where we're basing the bulk of our services, I think the economy is strong and there's still a lot of room to run. And based off, what we try to do is, we try to offer advice and get paid for the value and the technical quality of the advice. And I think there's an unlimited amount of opportunity for us to be in the advice business, especially for those higher net worth that need it, and the small business and medium-sized business owners that really haven't had an advisor relationship, probably because they haven't had $1 million portfolio to manage. I do think we're gonna see tough spots. Anytime interest rates spike and then maybe contract, there's triage to manage through that. Whether you've got debt funding a life insurance policy or mortgages, there's always stresses. Real estate, there's always stresses there with interest rate changes. But I'll tell you, our annuity business that's tied to interest rates, it's unlocking opportunities that we haven't seen in a decade of providing clients a higher guaranteed paycheck for retirement. And we're increasing paychecks for those that are paycheck to paycheck or living on fixed income. We're able to increase in some of these instances 30-40% of a client's fixed paycheck. And so when interest rates rise like this, it does create challenges, but it also creates opportunities, especially if you have levers to pull to pivot in your arrow or quivers in your arrow. Arrows in your quiver. I'm sorry.
Absolutely. Exciting times ahead for sure. Well, Jake, before we close out our conversation today, if you had to give one piece of advice for aspiring entrepreneurs, financial professionals in this field who are looking to make their mark in the industry, what would that be?
Well, I was never the most educated. I wasn't the smartest guy in the room. That's probably a really good thing. But I would just say, if you're starting a business, being an entrepreneur, it's a competition, and you have to treat it as such. And being hyper competitive, as I am, you've got to really study who you're competing with and know what they do well and know where they have opportunity for improvement, and really focus on how to drive differentiation. Our business is extremely commoditized, and everybody kind of sounds exactly the same when they say what they do. And I've tried to really study, how do you differentiate in professional services? And I think there's really only this is three. I need to add a fourth here, but there's only three that I've got here. There's product differentiation, there's pricing differentiation, and there's service differentiation. And all professional services ultimately falls into one of those three buckets, whether you're a wealth management firm, a CPA firm, a law firm, any of those professional services. You could differentiate by having more products or better products, or you can differentiate on your price or how you charge or how you value your services. Either you're cheaper or you're more expensive, or service. And most people say we differentiate because we have great service, but they're defining reactive service and how they react. And
Right.
I think when it gets really competitive and you're competing with the biggest firms that have all the horsepower in the world, it's really the proactive services that you offer that your competitors don't is really about the only way you can differentiate. And so if I'm talking to a young entrepreneur or somebody that's really wanting to start a business, you got to compete, you got to differentiate, you got to have some value, and then you got to work. And I know everybody knows that, but I think that's the only way to be successful, because it's a competitive environment, especially now, from when I started 25 years ago.
Yeah.
Great advice. Well, Jake, thank you so much for joining us today and sharing your insights with us and our audience. It's been an absolute pleasure having you on the show.
Thanks for having me. It's a pleasure, and hopefully we'll do this again soon.
And to our listeners, thanks for tuning in to another episode of the What Matters podcast. Remember, success is not just about what you achieve. It's about the impact you make along the way. Thanks, everyone. Until next time.